So let's get started. Schedule today. We're going to give you a broad outline of what we teach on the Thailand program. Sheki's going to go through what we mean when we say things like staying in motion. Okay, it's very important to understand this because that's a lot of what the program is about, because it's incremental to what you would learn by not coming on the program. And Sheki's going to talk about execution as well. And then I'm going to talk about the network effect. Sukrab and Khaled are going to jump on after Sheki to discuss their track record and go through their trades. Okay, so you've seen this chart before. The systematic process, long-short portfolio management, 20 to 60-day time horizon. What do we do on the Thailand program? Well, most of the work on the Thailand program in the classroom is in this area here, okay? Absolutely nailing the quantitative and the qualitative process so you can generate a ridiculous amount of high-quality ideas forever. That's the whole point of the classroom, okay? Now, obviously, we structure trades and put trades on as well while we're there. That's part of it. But this is the bulk of what you learn in the beginning of the classrooms, okay? So I'll go into a bit of detail in a minute. Obviously, what you want to be considering with the Thailand program is what you learn incrementally. You know, there's no point in obviously going to something like the Thailand program unless it's going to add a ton of value to your trading, which it does. And we'll show you that today. So you're looking at 10 days as a trip. There's 4 classrooms, okay? Total of 32 hours, plus 30 hours of group homework sessions. You'll be put into the groups of your mentor. So if, for example, you're with Sheki and there's 5 of you, you'll be doing homework with those 5, with the 5 of you in between classrooms, okay? And then obviously that's followed by your 12-week program mentoring on Skype with the chosen mentor. That's basically 1 to 2 hours a week on the phone, 10 to 15 hours of homework every week for 12 weeks. So you're basically looking at 44 to 56 hours of direct mentoring from the mentor and mentors in the classroom in Thailand. Self-study, group study, home study, 130 to 180 hours. So you're looking basically at about 174 to 236 hours over a 14-week period. Now, using a 24-hour day, that translates into 7.25 to just under 10 days over 14 weeks. But obviously, you shouldn't be using a 24-hour day. That's just theoretical. But let's say it's a 12-hour day. Just double those numbers, okay, over 14 weeks. That's how much work you're going to put in over a 14-week period. So this is what really makes the incremental difference between the Thailand program and the remote program. It's getting all of that experience during that time versus a 12-week program where you're on the phone with the mentor 12 to 24 hours over a 12-week period. So it's a huge difference in terms of time, energy, effort. What do the classrooms look like? Okay, 4 classroom sessions, 8 hours each. You land on a Thursday. Everyone flies in from around the world. We call that our orientation day. That's everyone arriving in Phuket with jet lag. Most people have jet lag, some people don't. But some people are flaking by 6 p.m. and want to go to bed, understandably. But we do have a welcome dinner, and we put people to bed at a decent hour, 9, 10 p.m. And then everyone's up bright and early for the second day, Friday, for the classroom. Classroom 1, what are we concentrating on? So classroom 1, all of them are 8 hours. We're basically clearing up all the mistakes that people make. We get those done as quickly as possible. We do long trade idea processes, and then we set homework, which is long trade ideas in the groups. Saturday and Sunday is group work. Monday, submitting the long trade ideas and going through them. And each guy has to stand up in the room and literally pitch their long idea in front of everybody. If there's any good ideas, we structure and initiate the trades. And then we set homework short trade idea processes, and then we also have an options class as well. And people have to come up with, in their groups on the Tuesday, short trade ideas. Wednesday, short trade idea submission and presentation, standing up in the room and pitching again. We initiate the good ideas, we put trades on. We have more in-depth options classes and go through more trade structures. Thursday, both long and short idea, portfolio building in the group work. And then on Friday, submitting the long and short ideas. We're portfolio building for individuals in the room, more on trade structures, and then we have a leaving dinner. Now, actually, throughout the week, we do come down to the resort, take you out for lunch, so you have breaks, take you out for dinners, etc. We do a few group activities, so you actually do get a proper vacation as well. Saturday and Sunday, rest day. You can fly home on a Saturday or a Sunday, depending on where you live in the world and what you have to get back to on Monday. So, broad outline of quantitative, qualitative processes. We obviously go into a lot more depth to what's important when generating ideas. And we set it at the benchmark at a pro level. So what we mean by that is imagine, you're sitting in the room with, if you're in program 1, we've got 2 classrooms in the resort. So classroom 1 is on one side of the swimming pool, and on the other side is classroom 2. And there's 12 to 15 people in each classroom, okay? Imagine you're in the classroom. We basically set it up as like it's a proper morning meeting at an investment bank or hedge fund. And everybody has to come with their ideas and pitch them to a pro-level benchmark in terms of quality, okay? Now, what's great about the dynamic is that if you show up in that room and your idea is below the quality that we look for, what do you think happens? Well, we're gonna go through it, go through all the reasons why you're wrong, and basically we won't end up putting a trade on until you've got to the level that we allow a trade to go on, which is the pro level benchmark. Now, what's great about that dynamic is everyone in the room gets to see that, okay? Now, because you get to see it, what happens? Organically, everyone's trade ideas just get better and better and better at a much faster rate. And what we found is that by classroom number 2, the quality of ideas really gets flowing. So what I mean by that is that a very high percentage of ideas start to become at the level of the pro level benchmark. Now, the incremental benefit of this is that by the time that you actually start your program, you're going to have already at least a few positions, if not more, okay? Because you will have come up with great ideas during the program. If you did a normal program, it might take you to like call number 4, 5, 6 to even get positions on, because we have to make sure that your trade ideas are to a level that are worth putting on. Because even on a remote program, we won't allow you to put trade ideas on if they're crap. We just won't allow that to happen, okay? Because we see it as our job that by the time you get to the end of your mentoring program, you can do all of these processes for yourself forever, and you don't need any help from anybody, okay? So the point of the incremental situation here is that you're well ahead. So it's almost like doing 3, 4 mentoring programs in one if you come to the Thailand program, because you get 32 hours of classroom and 30 hours of group work. So it's like doing 4 times more than you normally would, okay? So now, because options have become really prevalent and really important for retail traders, what we try and do is we try and force you into trading options 100% of the time. And I'll come on to that in a second. And essentially, we're aiming to take advantage of 3 options expiries during the 12 weeks of the program. So options expiries in May, June, and July. We're targeting a 50 to 100% ROI return on investment. So whatever you deposit into your trading account, that's what we're targeting as an annual return, okay? And to get that with a sensible level of volatility, you need in the underlying assets implied 25 to 35% annualized vol to enable that to happen. And we're now doing 100% options trading portfolios, okay? Now, on this point with trade structures, what we're doing here by forcing everyone to do 100% options positions in their portfolio. So imagine you have an options portfolio of lots of long calls, lots of long puts, lots of different structures, okay? What we're actually doing here is basically getting rid of one of the most criminal habits of retail traders, and a habit that many, many people still have at the Institute, even though they've been trading for a while, okay? It's distinguishing between a trade idea versus an investment idea. So basically, if we force you to choose a calendar that's no more than 3 months out, what does that do? It forces you to concentrate on catalysts. So you come up with trade ideas and not investment ideas, where you identify a good or a bad company. You just want to buy the stock long or short, and then you put the position on and it's just on forever, okay? That's not what we do. We're traders. We're forcing you to think, why is the stock going to move in the next 1 to 3 months? That's what we're trying to do all the time, okay? And this becomes really, really obvious when we're on the Thailand mentoring program, because if somebody wants to structure a trade where, say, we're in April on the program and they want to buy the September calendar, okay, with an options trade, we're not doing it. We're going to reject the idea. So we're really, really tough on you, because we know that we have to train you up to a point where you come up with trade ideas, not investment ideas. And we work backwards from that time horizon to identify trade ideas. So now we're literally forcing you to do it. We won't allow you to put on a trade, okay? So we're teaching you how to use options with that time horizon to structure ideas optimally within that time horizon. So what do you end up with? You end up with essentially building options portfolios that have asymmetric risk-reward profiles, okay? I'll come on to what that means in a second. And also, because it's still a long-short equity portfolio with optimal asymmetric trade structuring, it also teaches you to become agnostic to market moves and therefore to eliminate the noise from the market. So when you speak to, when Sukrab and Khaled are speaking later, you'll probably realize from their experience, they're just not bothered what the S&P 500 is doing. It's just whether they're making money or not, okay? So you become very, very agnostic to market moves, okay? Now, in terms of risk management, if you've been on previous webinars where I've discussed this before, you'll understand these 5 points, okay? So it's the 5 outcomes to a position for professionals, okay? Number 1 and 2, we lose money, but we only have 2 outcomes, okay? We either lose a little, or we're flat, or even make some money out of a losing position, okay? So when we're wrong, we even try to make a little bit of money, okay? When we know that we're probably going to lose. 3 and 4, make money, only 2 outcomes. We make a decent amount or a lot. And the decent amount that we make is greater than what we've lost when we lose a little on the losers. So usually it's a much higher level, okay? So let's say you're running an account with 25 grand in your account. If you lose on an average loser 300, the decent amount that you're making is probably 1,500, okay? And when we make a lot, we mean a lot relative to your margin, obviously. You know, on a 25 grand account, that might be 3, 4, 5 grand, okay, on one position. Outcome number 5, the catastrophic loss. For pros, it just never happens or extremely rare, okay? Because we have risk management in place that's preemptive, that makes sure we can't have a catastrophic loss and get a big portion of all of our account wiped out, okay? So the preemptive risk management eliminates the catastrophic loss. Reactive risk management, that's when we're staying in motion. And those 5 outcomes occur because of those 2 scenarios that we implement, which is preemptive risk management and reactive risk management. Now, incrementally, what do you really learn on the Thailand program and on the subsequent mentoring program? The most important thing when you go live with a mentor after the Thailand program is the reactive risk management to losing and good positions. Now that enables outcomes 1, 2, 3, and 4. We can do much more as mentors when we're in a classroom with you and hanging out with you for 10 days in Thailand, and then we've got you on the phone and you're much more advanced than on a remote program. We can get involved in a lot more ways to show you tricks and things that happen, how to get out of losing positions, how to handle winning positions and how to get bigger, how to make a lot more money than you usually would, stuff like this, okay? The point is that you're far more advanced than someone on a remote program and way more advanced than somebody who's only done a PTM and POTM, that we can actually entertain teaching these situations, okay? Now, the problem is, guys, none of it can be taught in a video series or you know, just a webinar like this, okay? It has to be done live. It has to be done with real money, and everything is situational to the situation that you're currently in that position, in that stock, at that moment in time, okay? There's just so many things you can do. It's infinite. But we show you how to find the right one, okay? And staying in motion in terms of reactive risk management, very, very important. That is a big part of your program when you're more experienced and you're trading in large size contracts in an options portfolio, because we show you how to structure, how to trade every position when you're losing, when you're making. And it's just a lot of stuff that you just would never, ever, ever learn, even if you're doing a PTM, POTM, or even on a remote program, because the guys are more advanced. Therefore, we can actually teach it because we know they get it, okay? Now, I'm going to introduce you to Sheki, who's going to take over. Sheki, I'll do the slides here, so just give me a shout when you want to move on to the next one. Take it away.
Okay. Lovely. Hello, ladies and gentlemen. It's a pleasure to be here. That's just a little bit about me. I spent most of my career at Goldman's, where I met Anton back in the 90s, good heavens, and at JP Morgan. I've traded derivatives and cash equities. I've been lucky enough to work in New York, Tokyo, Johannesburg, and of course, London. But that's enough about me. Well, I retired last year from the city. If we can have the next slide, Anton. I took a bit of time off, and I was talking to Anton at the end of last year, and he asked me to come and trade a couple of the options portfolios, which I was very happy to do. It's been a lot of fun. But subsequently, I've obviously had discussions with Anton about the mentoring program, and I really liked the way it was being taught. So Anton invited me to jump on to his latest intake of classes, which includes Sukrub and Khaled. And it was excellent. I found it a beautiful and satisfying experience when you see students come up the curve. You have to do it live, as Anton says. You need to trade a few expiries, and then all the knowledge that you've picked up along the way, whether it's through the video series or in Thailand in the mentoring classes, starts to filter through. and you can see the awakening happen, and it usually corresponds with a lot of profitability. And that's why I'm delighted to join the mentoring team and spread the love. I'm continuing to work with Khaled and Sukrab now, even after the program. Staying in motion. Well, let's set the scene first. You've been to Thailand. You're developing an excellent stock picking process. You're really starting to think like the professional. You're honing in where to look. You're starting to build up an intuitive picture of the market, of sectors, what you like, what you don't like. You're learning how to put trades on. You're learning how to structure trades, and you're learning what the payouts will be, giving you control and agnostic. Is that the end of it? Do we just put trades on, fire up a cigar and wait for 2 months and see how much money you've made? Of course not. We're long volatility traders. That means we like it when stocks are moving up in our favor, and even when they're moving against us, there is always repair trades to do. Staying in motion. Let's get into it. What does it really mean? It means portfolio management is going to be one of the tenets of your success. Because we know what our payouts are, because we're not watching the S&P tick by tick, we are in control. We know if a stock moves up, we're going to take these actions. If it stays flat, we'll take these. If it goes against us in the short term, in other words, our timing may be off, which it often will be. We know that we're going to book profits. We've got time value. We can repair trades if the fundamentals are still intact. It's awesome. What we need to do is not panic. What staying in motion doesn't mean is we look at our unrealized P&L. We have a day trading mentality. We're annoyed we didn't sell it at the high. Then we watch it go down. Then it goes down. Then we panic. Then we have an arbitrary pain threshold beyond which we can't go. And then it goes down again and we sell it. Then the stock rallies and we think about buying it back. We are not day trading options. What we are going to do and teach you to do is continuously stay in motion in your mind and continue to work out probabilistic outcomes with payouts. That's it. We're not going to go into any more detail, but you've got a live portfolio. The market change, a week is a long time in the current world. We might have a 10-week trade on. That means we try to build in positive asymmetry into your portfolio. We do not trade the unrealized P&L. We're constantly tweaking and assessing the portfolio to give you that situation where even if half your trade ideas don't work out, we're going to be making money. If 1 out of your 10 ideas really performs well, you're going to be making a lot of money. Now imagine we're doing that with 5 winners, 5 losers. Imagine it will probably motivate you to do more work on your ideas. Imagine if you have 6 out of 10 which work. Imagine what that does to your payoffs. Khaled will actually talk about an example that we've had recently in billing. You know, to set your expectations of the power of the mentoring program. If you're a great stock picker and your timing's perfect and everything we buy goes up and everything we sell goes down, that's great for P&L. But it's not actually that useful because you will not have learned all the lessons that you need to be able to set off on your own and do this for 5, 10, 15, 25 years. Having losses is to be expected and it's something to be welcomed, because one of the crucial parts is understanding that when something goes wrong, you have the skill sets to minimize your losses, sometimes even through to a small profit, but everything manages out. Then it gives you time for your correct trades to start to work. We always want to be long time value. We always want to minimize our risks, but also be realistic. I've seen this on a couple of programs already. You know, stock ideas weren't great to start with. There's a lot of repair. So we're constantly working hard, making a 3 grand loss to a down 500 or a 5 grand loss to a down 100. And it feels a bit hard work. You're putting hours into your stock picking, you're doing the homework, and we're saying, great, we're learning. And you're after 8 weeks, you're saying, yeah, I'm learning, and now I'm still down small. So often, in the last month, a couple of ideas come right, the final penny drops, and students light up because they really understand what we're trying to teach, which obviously is situational. It's not about trading unrealized. It's about keeping asymmetry and staying calm. Now, idea generation is very good. I've been very surprised by the students, and it gets better with time. If you come off the Thailand program, you're going to be in an excellent starting position. Obviously, you have to know how to structure trades. You have to calculate payouts. It's a lot of hard work, okay, but it's incredibly rewarding. You need to trade a couple of expiries. Bear in mind, we'll be doing extra trades into expiry. We'll be trading just out of those just before expiry, and the core book of ideas will be running in the background. It's very exciting, and you know, it's a great journey to go on. So now you've had ideas, you've structured trades, you know what your payouts are. We're staying in motion, trading the volatility, which is how we're going to make our money. We must now mention execution. We have to beat out of you the day trading mentality when it comes to execution. We want to be precise. We are trading spreads. If we can have the next slide, Anton. And so now we come on to a quick chat about execution and the perennial question, does size matter? Well, the answer is yes and no. The long and the short of it is, if you start off with an account size of $25,000, it's plenty big enough to successfully learn the process of expiry. What it does mean, though, is you will be limited in the universe of stocks which we can structure trades around. Because we're trading spreads, which by definition means we're going to be buying 3, selling 2, buying 5, selling 3, so on and so forth. If we're trading high value stocks, let's say above $250, an at the money option might be $12. So to buy 2 of those will be an outlay of $2.5 grand, which is the limit. Because when we're building a portfolio, we're going to have 8 to 10 positions. If your account's 25 grand, your net spend on a call per strategy can't be more than $2.5 grand. Is this a disadvantage? Only from the point of view that you will be excluded from trading Tesla or Amazon. Not that I'm suggesting you do a trade in that at all. The only other thing to be aware of, because we trade spreads, your ratios may be quite small. So we might be buying 2 and selling 1, or buying 3, selling 2. And that does give you incremental legging risk. I'm not going to say any more than that. We teach this thoroughly in the programs, but it's something to be aware of. Clearly, if you have a larger size account, it will allow you theoretically to trade the whole universe of stocks. Take Apple as an example. It's at 400. It does a 4-for-1 stock split. The stock's now at 100. Theoretically, that would allow some more option account sizes to trade Apple structures if they wanted to. But clearly, having more in your account to start with doesn't increase the chances of success. It just means you might have a slightly larger universe of stocks from which to get your ideas. If we could have the next slide. With a larger account, you may be buying 15 contracts, selling 10 across each of your strategies. Clearly, there is a need for surgery versus butchery. Very quickly, butchery, you just go and rip offers to buy your options and you hit bids. You pay the spread. This can have a devastating effect on your payouts. It's a lot more than students normally think or intuitively would think. We clearly teach how to trade large spread orders. We do it in a way to minimize legging risk. We can never exclude it. But again, these are the skills that you'll have to learn. So really, what we're saying is, the cornerstone of your success is your fundamental ideas. You've got to structure the trades. You've got to understand your payouts. You've then got to stay in motion. You've got to be able to repair strategies when they're going wrong, whilst never losing sight of the big picture. And you need to execute. Final thing on execution. If you're going to run your portfolio for a year, and an average trade might be anywhere between 2 weeks and 12 weeks, we can safely assume that you need 10 stocks per quarter. That's 40 stock ideas a year. We're then going to trade every month at expiry, which offers a great opportunity for further money making, to put on perhaps 3 or 5 option expiry trades that might only last as short as a week and maybe a month. That means you've got another trading day in, another trading day out, repeat. So in an average year, you might be in the market trading spreads and unwinding strategies for profits 40, 50 times. You need to understand how to execute. If I said to you on a 25 grand account, if you have a bad execution day where you don't follow what we teach you, you might do yourself out of $300, $500, multiply that by 50 times a year. Okay, it's not what we focus on because your stock picking is the most important thing. But you have to know how to trade your strategies. They can have a bigger effect on your net returns than you think. And this will all get taught. And this is why the programs are the basis of how you can move on and become fully fledged and ready to go. Thank you, Anton.
Cool, cheers, Ed. So what Ed's talking about there, Sukrab and Khaled are actually going to show some examples now. So Sukrab and Khaled started in April on the program in the Zoom classrooms, and then started trading like first week of May. Okay, positions were going on from like the first, second telephone call for each guy. Sukrab started with $100,000 in his account, made 45% in 14 weeks. So it's been 14 weeks since he started, and 2 weeks since he finished his program. Khaled, bit bigger, started with 300K ROI. I think you're actually up more than that now, right, Khaled? Yeah, I think he's actually up like 63, 64% now, because he took some profits on some stuff Thursday, Friday. Now, basically, Sukrab and Khaled aren't going to show you their current positions because of the copy risk that we always have when we show live positions. We're not going to be doing that. What they're going to show you is all the trades that they did and that they closed over that 14-week period, okay? And they're going to discuss some of the highlight situations and their trading stats. So why don't we start off with Sukrab. Sukrab, you'll have to unmute on your side. Yeah, you should be on now, Sukrab.
Can you guys hear me?
Yeah.
Perfect. Hi, guys. My name is Sukrab. I'm originally from Central Asia, like from Uzbekistan. I moved to US about like 15 years ago. I'm running like a couple successful companies like logistics, like construction, software engineering, and credit card processing, like for banks. And when I started like trading, like if I can call it trading, I started about like 2013, 2014. Me and my partner, like we started trading like options. If I can call it like trading, like I can say now, like after all this like mentoring programs and stuff, like I was just gambling. Like we were just gambling. We started at that point like with about 200,000. We went up to like 750,000, and in one day, like not in one day, like in a couple of days, like we lost it all. Then I moved myself like to Bitcoin. I started from Bitcoin, like went up to 2 million. Then the Bitcoin dropped, but still I made like some dollars, but it was just like gambling experience. Then I paused myself. I lost interest on all the trading because I didn't know like what to do. Like I was just going like by general public, like I was reading news on TV, like I was just going through the flow and losing, and I didn't like it. Then like about a year ago, I started like little by little, like doing options again. It's like naked options, because I didn't know the other way. I thought like it's pretty cool. Like if you hit, you hit. If you lost, you lost. But most of the time you lose. And then one of my friends like recommended like Anton, like to follow him on YouTube. And I started following Anton on YouTube. I liked the ideas. I liked the seminars like that he's doing. Then I decided to do like POTM, like online courses. I took it, and from that point, I knew that I was doing like completely everything wrong. Then we had a call with Anton, and I decided to do like Thailand mentoring program. And on Thailand mentoring program, what I love the best, like when you sit like with 4 or 5 different mentors, with 20 plus different guys, like generating ideas, like knowing like how when you're confident on your like idea that you think like that's a brilliant idea, and at the end of the class you find out that it was completely wrong idea, and you can lose a lot of money from like putting that trade like on your own. And like now I know like exactly like from each idea that I'm generating, what's my execution plan, like what is my best exit strategy, what to put, and like how to secure myself like from losers. And overall, like I love what I'm doing, like what I learn. And if you look at the screen, this portfolio that I opened just to run it with like Anton, like I put it as I mentioned, I started like with 100,000, like about like a little bit over 3 months ago, and I up like almost like 43,000, like it's about like 45 ROI. And but I have my larger account. I run it like on my own, like it's like 1.5 million plus. I implement all the stuff that I learned on a mentoring program and to that portfolio too. And if you can see, like the wins from almost like 44 trades is like win score about 31 versus like 14 losses. Again, like I started like most of the losses like it's from the beginning of the program when I didn't know how to put the trades, and like what's the ratio to put it on, or like how to exit on the when you're winning. Yeah, I was on some point I was greedy, on some point I didn't know what to do, but at the end of the day, like now I'm so confident to put any trade that's I want to do. And if you look at the, let's say if we look at on the trades, like on row 18, like on Etsy, I did like about 10,000 on one of them, and the next one is like 4,000 on the row 19, and I did like on Pega. If you scroll down, Anton, a little bit. Yeah. By the way, this what's funny about the stock. Like if you remember, Anton, yeah. We got this like trade from the mentoring, like from the Thailand class. Like when I believe the guy name was Vincent or something.
I think it was Scott, right?
Yeah, he couldn't put that trade because of like his portfolio size or something, and I'm like, okay, I can get it, and I put it on, and I'm up. I totally bought like more than almost like 20 grand on this on one trade, and on my bill, like if you look at it, like at the end, like I almost like flat on this portfolio, like wins and losses, but as I said, like I implement all the knowledge for my bigger portfolio on my other account. And yesterday I just closed like Pinterest, which I made about like 120,000 on only one trade, which is like amazing. And yes, I was doing like I was going after that trade about like 2 months, but in 2 months I invested like X amount, and like I multiplied it. Like it's pretty amazing. Yeah. And I started with Anton in Thailand program. Then now I'm like doing like exit strategies with Edward, which is amazing. Like I love it.
Cool.
Yeah.
Cheers, Sukrab.
Yeah,
We can obviously take questions on Sukrab's account, but we can quickly hear from Khaled, where basically Khaled started with 300, up 193 at the moment. So take it away, Khaled.
Hi everyone. My name is Khaled and I live in London. I'm in the hospitality business. I own a few nightclubs and restaurants. I have been trading for 2-3 years, as you said, if you call it trading. I make a lot of mistakes, all the mistakes from technical analysis to over leverage to using too much margin to anything come to your mind. I did it. All the retail mistake, I did it. It cost me almost 200,000, I think, a little bit over 200,000 over a 2 year period. I was frustrated. I was upset. I didn't want to give up. I didn't like the feel of losing because I know I can make money and I can make it work. One day, my friend sent me Anton video, I think one of the original video on YouTube of why retail trader lose money. And I think that's what's got me excited and interested. I took a break from trading. I stopped myself completely for 2 years period, more or less. I start studying, I start focusing, I start learning. I follow all the mentoring program. I did all the classes, and then I decided to join the institute and do the mentoring class in Thailand. It was amazing, and I learned a lot from the mentoring. It gets you into the habit of generating idea and the way you do things and the way the process and the system. The minute you have a process and a system, then you are not just gambling. You have a solid ground to the way you trade and the way you do things. I learned a lot from the mentoring program, and as I said, I start trading. I built my portfolio probably from the mid of May, which the current one. I deposited 300,000, and I decided to utilize just this one for now to see how it's gonna go. I start trading from the middle of May with Anton and building a portfolio, following a process, following a system, structuring the trade properly, and generating good ideas. I had almost 10 ideas always on my account at each time, long and short. We were following the process again, everything we learn. And it's interesting because I started with 300,000 and now I'm up 193,000, which almost 64%, as Anton said. My winning ratio is 71%, losses ratio is 28, my R is 1.98, and my Kelly is 57. And it's interesting, as Anton said, there is things you cannot learn just by doing the class and doing the videos and doing over a video series. You have to get your hands dirty. You have to do the trade. You have to put the trade. You have to structure it, and you have to make the mistake to learn from your mistake. And I didn't know, as everybody else, I used to trade a bit of options. I trade stocks, forex, everything, and you buy, you sell, you just hoping for the best. As Sukrab said, it's more like a gambling. When we started building the portfolio, I had a system in place and the way we start doing things. My trades were working well in general. I'll point out some trade where I think one of them is Bill. I'm sure one of them is Bill, which was a great experience for me. Anton, if you can just move to Bill to show Bill. So Bill was a great trading experience for me. I'll talk about my winners after, but Bill was a company which I loved and I think is great. We structured the trade, it started working very well. We start making money on it, and it was a company which performed very well over a period of time. One day we decided to put another trade on. So I unwind my old trade, I'm putting the new trade, and I make a mistake, as Ed was saying. It's called the legging risk. I did it before I knew. Again, I wasn't very experienced trading options. I start putting the wrong strike on my strategy. I make a mistake. The price was moving against me. I kept on putting the same strike without realizing what I was doing wrong. I almost was gonna lose almost 40,000 pounds on that position alone. Anton and Ed show me different way to structure, as we call it, the repair trade. You don't give up. You don't close your position like this. There is always a way to come out of trade you have put on. And we structure a new trade, we start putting in there. And as you can see, it's one of the most traded position I have in my portfolio. And we end up almost flat in the position. And we still have a position on, and I think it's going to be making money in the long run. But it was very interesting to see and to feel and to learn from professionals how they do the trade and how they structure it and how they correct it. They don't just close it and call it a day and we move on to the next one. You structure a new trade, you correct it, you fix it, and then you move on. And I learned a lot from that experience. And it was almost going to be a very expensive lesson, but I end up from it flat. The rest of my trade, they were all doing great. Is diversify, is different companies. And if we move to Zscaler, please, Anton. So I will just show Zscaler. It's also one of my best company, and it did very well. And I think it was one of my best winners. We end up making almost, I think, 65,000 on the trade. And if I didn't structure the option the way I did and stuff, etc., it would have probably be another 10 and 15,000 winner position. But the way we structure the option, the way it gives me a time value, it gives me a different way to trade it, it gives me a different potential and different outcome, and there is always something to do and stop in the position. So this is my story, and this is my position, and this is my winner and my losers. And again, you can learn a lot of things from the video series, but unless you get your hands dirty and you learn them directly by doing your trade and from the mentoring and stuff, it's a different experience. And I'm grateful for the guys always. So.
Cheers, Khaled. Okay, guys, so that's it for today's presentation, guys. We can open up the Q&A area. So feel free to ask questions. And even Sukrab and Khaled, you can fire questions at them. But we've got nothing to hide at the Institute. Everything we do, can be talked about, apart from obviously the real detail of what we teach on the program. You have to be that. You have to be on the program to see that.